Okay, guys, sorry, the Zoom ended, but once this is done converting, I will drop this recording on
Recording in progress.
I'll drop this recording so that you guys can view it and watch over and over again. So, and please, for anybody that had their question, please drop it on the comment section. I'm really sorry I didn't go through that before time passed. There was a lot of things maybe I needed to explain before. I don't know, time just went by without me even noticing. Really, my apologies for that. So you can send back your question, and by the end of this session, I'll reply every single comment. So, quick on point. The reason why I'm expecting this market to buy above is because a lot of people were expecting this market to sell, and notice the way that the market ended up being bullish. Now, it created a nice bullish order block area on the daily time frame, right? But on the weekly time frame as well, look at this is the weekly time frame that I boxed on the previous video. Okay, I boxed this area on the previous video so that it will draw your attention. Now, notice how we'll have a higher time frame directional bias to the upside and another higher time frame directional bias here, right? Now, these people here will be selling this market because of the fact they are trading based off of order block or whatever support and resistance or whatever strategy that they are doing. And as a result, their stop loss will be here, right? Now, their stop loss will be our take profit. So their stop losses will be here. Okay. Meanwhile, we will be buying this market aiming at their stop loss and the imbalances that we have in the market here and the equal highs as well that we have here, plus this other imbalance that we have here. So we have a long bullish way to go on UJ at this specific point. Okay, what conference are you using for the buy? U2 apart from, I don't know the meaning of low Q sweeps. I don't really know the meaning of that, brother. I trade my model. Okay, I took liquidity, exactly. So I took the liquidity, this liquidity, like I explained earlier on, right? Again, I have more buying pressure from the higher time frame. Okay. And from the higher time frame, again, momentum, this is where we'll have the weekly order block here. If we go on the weekly, we have that weekly order block here, right? That's why I boxed this area. Let me reduce it a little bit. That's why I boxed this area. Now, if you go on a daily candlestick, look at this area. Look at where we have these rejections here. Okay. If you're buying this market, you want to use a reasonable lot size that will give you room for volatility. Use a stop that will make you put a wider stop loss. Okay. So let's go to the 4-hour time frame. The reason why this market might sit below this area is to fill these imbalances and to bring another liquidity in the market, that's sell-side liquidity, people that will be taking their sell order, hoping that this market will sell, right? Us knowing fully well our directional bias because of the liquidity that we see here. Look at this. If you know candlesticks, I think this is a hammer or something. Look at the way the market played out of this area. The market never came back. The candlesticks never closed below this area anymore. Look at the way the candlestick respected above, even though it was bearish, but it never closed below this previous area, right? It was just respecting this area. It was just respecting these 4-hour bullish order block, right? So after the market, okay, this video has done converting. Let me drop it on the Telegram channel while it's loading. Excuse me, guys, excuse me, 1 minute. 1 minute, please. Okay, there you go. So the reason why I want to see this market drop below is to build more sell orders, right? I don't want to see the market come back below this for our candlestick. If the market reach out below this area, then I know that this is a market shift. Okay. Now, me having that idea that knowing fully well market is not going to be reaching this area, any sell move is a buy opportunity for me. Any sell move for the upcoming week will be a buying opportunity for me, which means if this market is selling here, right, I want to be looking for buy opportunities. And when I'm looking for buy opportunities, my stop loss should be here. So you can hold this trade till the end of next week. I'm an intraday trader. I don't scalp. That's why I can hold trade for a longer period of time. So this will give you momentum. This gives you automatically momentum to the upside. Same as being bearish in the market, right? You want to look at the higher time frame to gain more momentum and the lower time frame for specific entries that will reduce your risks in the market. So if this market is to buy to the upside, right? What do we observe? We have imbalance here. We have these areas that the market needs to reach. Let me check these real quick. Okay, clear enough. Weekly order block. Exactly. This is the weekly order block over here. The market bounced off of this zone. If you go to the daily time frame, you saw that, okay, the market respected the weekly order block. No, the market just created a new weekly order block based off of this week market closure, right? Because that's when the market created this weekly order block. Now, if you go, let's go to the weekly order block, by the way. It's because this week closed above that it just created now our weekly order block here for the upcoming week. That's why we want to be buying this market above based on this weekly order block that this previous week created. Now, if you go to the daily, you see that not only it is respecting the weekly order block, but it's just formed another nice bearish order block above the weekly order block. So you see that there is a lot of reason why this market has more buying pressures than selling pressure. But institutions know that the book that they give you out there will tell you this is reach a resistance zone or a support zone. I don't know how you call it. That's not my trading style, but it reaches a specific area, so it needs to sell from this area, right? Now, maybe when you see a little sell, you say, okay, the market is moving to my direction, and you stack more orders. And now you see a boom above. You don't understand what's going on. That is market manipulation. The books already know the way you're thinking. And when it spikes above, you see that we have every reason here why the market needs to push above other than going below. So what you want to be doing is refining it out to the smaller time frame. Don't rush into entering a trade, giving time for your trade to form. You know, one day, if you don't see a setup, it's okay not to see a setup instead of going to the market and forcing a trade and losing money. Okay, that's the thing that people do in trading that reaps them a lot of money. The fear of missing out. The thing that they stay in the day without trading, they are missing out. You are not missing out so long as you're not losing money. It's saving your equity, it's saving your capital from a lot of things. Rather refine your entries and look for that one better trading setup, even once in a week or twice in a week or thrice in a week. How many times your model or your trading setup form, that's when you take the trade. I have a lot of people telling me, oh, how many signals do you send a day, or how many pips do you expect in a day? I'm not the algorithm. Okay, I'm not doing marketing here. I trade based off of what the market gives me. I don't trade based off of your expectation. And the reason why it affects a lot of us is because we want to trade the market with our expectation instead of going with the flow. Because of the fact a lot of people are expecting this market to sell, it blurs their vision from going with the flow instead that this market is doing actually another thing. So they should change their ideology of a sell that they had at the first place and instead take a buy. That's what I'm talking about, your expectation. Your expectation is what makes you fail sometime because you don't want to change your bias. You don't want to believe that you could be wrong. So I don't usually tell people that, okay, you have 100 people in a week or 500 people in a week. No. Okay, I trade based on what the market gave me. There are weeks that I don't trade. There are weeks that I take losses. I make losses in the market. I'm not 100% profitable. But what matters is the filtering of how I filter my setup, how I filter my targets, and how I filter the entries that I take. And my risk to reward always come and mitigate those losses and even make more profit than the losses that I incur. So this market has more probabilities of going above. And USD JPY is doing, USD JPY and gold are inversely correlated. If USD JPY is buying most of the times, right? Observe gold. Gold is literally doing the reverse of USD JPY. This is gold on Friday. Notice how gold sold aggressively and USD JPY bought aggressively, right? Let me tell you why gold needs to sell again aggressively to this point where I have this line. Now let me break that down to the 4-hour. And before gold needs to sell, we might see a little buy above. Like I told you that any sell on UJ is a buy opportunity. Gold will instantly need to buy above to fill this imbalance before the aggressive sell. So if you want to be selling gold and you're an intraday trader, you want to selling gold like this, okay? Your stop loss needs to be at this area, at this high. Because if gold is to continue selling for the upcoming week, it shouldn't come back to this high. It should keep selling to this level. Why do gold need to sell to this level? That is the question. There is liquidity here for those who have been buying this market. There's liquidity here. There's stop loss here, right? Buy-side liquidity have been taken out several times. So there's almost no more buy-side liquidity. So the need to reach for this sell-side liquidity now. Notice how this previous high was taken out here. This previous buy-side liquidity was taken out before the aggressive sell on Friday, this area. It peaked above, came back, and boom. Now, look at this area where I have this. Look at this area. This is what I call a shift in market. Because look at the aggressivity of this sell. This area is where the market break. It's what they call a shift and a break in market structure. Okay, so it break the market structure from the buy that was going above, and he had already taken out the stop loss of these sellers. Now it came back, it sold aggressively. So any buying opportunity back up here is a buyback into the gold daily order block. Because if you go to the daily, right, you see that this buy, like I say, if this market open, it buys back above into this area where we'll have this blue line. Let me change this color a little bit to blue here. So this blue line, we'll be looking for more sell opportunity, right? And if we calculate this, it's crazy. It's like 30 pip stop loss for 110 pips, right? So any buy above into this bearish order block is a sell opportunity on gold. And any sell on USD JPY is a buy opportunity. So that's why I say keep an eye. That's why you guys saw me started for the new people, you will not understand, but for the old people that have been with me for some time, that's why I added gold into my trading period. I used to just have just USD JPY, just trading just USD JPY, but I added gold because I noticed that they are invertedly correlated. It will not work 100% of time, but like I tell you guys, don't take my words for it. Go into the market, take these two pairs, observe them keenly. Even in the upcoming week, observe the way they behave. And you will confirm it yourself, and you will see if what I was telling you was the truth or not. So we are back on USD JPY. I'm back on USD JPY. I think I'm done with market breakdown for today. I don't know if anybody have a question. If you have a question, you can ask. If not, I think we will end this session here. So I don't know if anybody has a question. If not, we'll end this session here. And I really thank and appreciate anybody that took their time to join us. And like I said, always we'll be having market breakdown every single Saturday, 1:30 p.m. GMT. For those who missed the market recap, I've recorded this session and the previous session. I've dropped the videos. You will receive the videos. You can go through it, and it will help writing and widen your understanding of everything that I teach. And thank you guys. Good question. Looking at the other block, can you use the Fibonacci to measure entry from premium level? Exactly. I like that question. I like, amazing question. Who asked that question, by the way? Oh, Bob. Okay, that's a very nice question, Bob. Dub. Sorry, Dub. Okay, that's a very nice question, right? Now, using the Fibonacci, let's take, for example, this, right? This daily candlestick. Let's go to the 4-hour. Okay. Using the Fibonacci, for example, here, right? You want to be using the most recent low and the most recent high, which is this. This is the most recent low. This most recent high. Oh, you can still take this most recent low and a recent high. Now, if you take your Fibonacci here and place it here, right? This is equilibrium. This is discount. This is optimum trade entry for buy opportunities. So any shift in the market in equilibrium, you want to be buying the market above. Sometimes it might not drop into our optimum trade entry, or sometimes we might experience some kind of quick move like a week on a higher time frame, but it might form some candlestick on a lower time frame, like 1 minute, 15 minutes. But sometimes we experience some week into this area, optimum trade entry, a boom, you just go back above. So this is a Fibonacci explanation of this entry, right? And using a Fibonacci actually is Fibonacci is one of the tools. That's why I like the question that Dub asked. Fibonacci is one of the tools that you guys will notice that I really use a lot. Okay, whenever I'm trading my chart is naked like this, because I have been watching price action for a very long time, and when I observe the market, I literally expect where I want to end. I'm just observe and expect where I want the market to reach at and why it should reach at this point, why it should go back above this point, right? But it's okay for you guys, to draft and all these I don't know, indicators, all these I don't know, I don't really know how to say it, but these things will only complicate your trading style. There is nothing as accurate as price action, and liquidity. There's nothing as more precise as that, because that is what controls the algorithm. The market feeds off of stop losses and take profits. No, the market feeds off of stop losses because that is what gives the market money. Okay, the market is controlled by liquidity. So if there is no liquidity, what does the market do? It needs to create contract. And how does the market do to create contract? Most of the time, it's when we have accumulations. Accumulation is where market builds contract. I don't know if we have an example of accumulation exactly. Let me take an example of accumulation here on this area. If you go to the, let me box it up first, quick, so that we'll keep an eye in this area. Okay, watch this 1 hour area, right? This is what I call an accumulation. This is what I call an accumulation. The market has been accumulating on this area, building more orders because what we have this spike. And based off of this spike, we'll have people selling because they think that the market has bought and the market needs to sell. Now, what does the market need to do to build more orders before doing the reverse of the dumb money expectation, right? The market needs to build more contract. And once it's building more contract, it's putting both buyers and sellers in the market, right? There's sellers over here that are selling this market and they are still holding their position with the expectation that this market is going to keep dipping. The market is going to keep selling, right? So they having that expectation, the market knowing fully well that they have their expectation. What the market does is it accumulates more buy and sell orders here. Having in mind, the algorithm has in mind that there are stuff here for those who have been selling this market. Now, after all this accumulation, this is still very, very small here. But imagine 1 hour candlestick, you sitting and seeing this accumulation on 1 hour candlestick. If you go to the 30-minute, you see that this is a huge bunch of noise, a huge bunch of noisy candlestick that sometimes it deals with your impatience. You just be like, fuck it, like, this is it, I'm out. So look at the 30-minute, look at how it becomes more saturated. So the market builds more contract here to put both buyers and sellers in the market. Now, before the market wants to buy to the other direction, what was I telling you guys on the previous video? Once the market is selling, look for buying opportunities because that is the fake move. Look at this high, look at this low. That was the support and resistance area where the market was bouncing off and buying and selling in this accumulation period. Once this market break out of this area, that was your buying signal to the upside. This is what they call the fake move. This is what they call the fake move because it activates sell stop and it take out the stop losses of those who were buying this market here to buy back above. And where was I saying that your target should be? Recent high here, recent high here. Look at where the market reached at. Okay, you don't be too greedy because if you're buying this market here, you really have a tight stop loss because you will not even be having a stop loss of like what, 650 pip. That's like 450 pip, yeah, maximum. But now what kills a lot of people is this patience to wait for that fake move. Now, once that fake move occur, if you miss this buy opportunity, this comeback is a buy signal for you. And you use this area as a stop. And you use this recent area as a stop. If you miss this and you see this boom, it took out the stop loss here. It come back into this consolidation area. The retracement into this zone is a buy signal for you. Why is a buy signal for you? Because observe the 30-minute. This formed a bullish order block on the 30 minutes for you to gain momentum off of that to buy to the upper side. That was after the fake move. So you need to be patient. A lot of people make money in consolidation. Okay, I respect everybody's opinion about that. My strategy or my model is not your model. If you're good at making money at consolidation, good and fine. Whatever I'm teaching you, it has nothing to do with you. But me, I'm focusing more on the major move. And the major move occur after the consolidation. That's why you see the aggressivity of the movement that is coming. Look at after, those who were trading here, they were trading just chop change. But look at after this market manipulation, it went like more than 400 pips above.
Yeah.
More than, look at this area, 600 pips.
Yeah.
That is market manipulation. Because when the institution wants to buy aggressively, they sell first of all to buy. So people that were trading consolidation, like I said, if it's your strategy, it works for you, good and fine. But I don't trade like that. I have mine. So what I do is I wait for this market manipulation and I buy aggressively. And after the market has taken out this high, right? And it came here, it created what they call a call here. Look at this, a high and this high. Equal highs. Let me put the trend line there. This red line. That's equal highs. Okay. What did the market do? It sold again below to gain momentum from this break in market structure to the bullish side. Okay. It came down below, see momentum from this area and buy. The first target is where this equal highs that the market created because there's liquidity here still sitting. Notice how when this market break in market structure here, it didn't reach at this liquidity at once. It first of all reached, gave more hope for sellers to think that, okay, if they shift their stop loss above this area, this market will, okay, it's more selling now. Now they have hopes, right? But it's instead coming back, like I told you guys, if the market needs to buy, then if the institution, the whales want to buy the market, they need to sell first of all to buy. Now, after this sell, right, the institution sell order is still available, right? If they were selling here, their orders are still available. Now, how do they do to mitigate that loss? Like I explained on the previous video, I'll explain that again here so that you guys have the loop of how the institution trade. The institution was selling here. They sold here, their set order is still active. Now they bought your stop losses that is here, right? Now, when they are buying your stop losses that is here, their sell order that is here is still active. They buy back above. Now, once they buy back above, they are in profit in their buy, but their stop loss is in drawdown of this they are buying. Now, how do they do to mitigate this sell that is here? This retracement. When this retracement drop below, it comes back at the open price to where they took their sell. That's when they offload their sell orders and the market keeps going above. That's how the institution works. Go into your graph. This is an assignment. Go into your graph. Observe every single time you have a break in market structure. You will see the same scenario repeating itself over and over and over again. I explained it on the previous video. I explain it again here. After the market, these puts them at break even. If they were in drawdown of $10,000, these put them at break even of zero drawdown. Maybe they'll make some slight profit on their sell position here to, you know, pay off their swap or their charges or their fees. But what they are more concentrated on, their buy order here is still on, and they can put another buy order here. That's how institutions scale in. And notice how ever since this buy area and this buy area, the market has never reached there before. The market went 600 pips above that area. So guys, it was a pleasure to have this market breakdown and market explanation with you guys. Like I say, it's always a privilege, and I'm honored, and I'm happy for those who attended and could be patient to the end. I hope this video was helpful to you as an individual, and I look forward to having you guys next week. And also this upcoming week, I will try to drop live trading session on the free Telegram channel to show you guys how this is going to execute itself and how this is going to occur. So thank you guys, and you guys have a wonderful weekend. You're welcome. You're welcome anytime.